Why the rupee is falling in 2025 even when the dollar is weak? The dollar is falling, India's economy is growing, inflation is under control. So why is the rupee still crashing and becoming the worst performing Asian currency in 2025? The answer is not what most people think. In 2025, the Indian rupee has depreciated nearly 6% even though the dollar index has fallen sharply. This video explains the real reason behind the rupee's weakness, why RBI couldn't stop it, and what could finally reverse the trend. So you are watching Trick the Tricky. The biggest reason, India's trade deficit. Trade deficit means rupee pressure. India is importing far more than it is exporting. What went wrong in 2025? Exports were hit hard. The US imposed tariff of up to 50% on Indian goods. Export to the US, India's biggest market, declined sharply. Imports surged. Gold imports jumped nearly to 100% in October 2025. Silver imports also rose due to festive demands. So result, trade deficit touched a record $41.7 billion in October. A large trade deficit means more demand for dollars, less demand for rupees. Rupee weakens. Secondly, heavy IPI selling made things worse. So foreign money exited India. In 2025, foreign portfolio investors sold around $18 billion. That is roughly 1.6 lakh crore rupees of outflows. Why FPIs exited? High market valuation, global uncertainty, impact of US trade actions. This selling pressure added continuous dollar demand, pushing the rupee lower. FDI was weak, no support from long term capital. So FDI didn't come to the rescue. Fresh FDI inflows were weak. Some foreign investors sold stake during IPOs. Net capital flows were negative or flat. So India had trade deficit, portfolio outflows, weak FDI, zero natural support for the rupee. Why didn't the rupee rise when the dollar fell? Dollar down, rupee still down. Normally, when the dollar index DXY falls, EM currencies strengthen. But in 2025, DXY fell nearly 8%, yet the rupee continued to fall. Why? India specific problem dominated. Export shock from tariff, FPI outflows, record trade deficit. Global dollar weakness was overpowered by domestic stress. So what was RBI doing? RBI shifted strategy. RBI intervened to reduce volatility, but it didn't aggressively defend levels in the last 15 to 20 days. Once key support level broke, the rupee slid further. RBI's current approach, manage volatility, not fix the exchange rate. Important point, economy is not weak. Fundamentals are strong. Despite rupee weakness, inflation is very low, GDP growth is healthy 6 to 7%, RBI policy credibility is strong. This is not a balance of payment crisis. The rupee is falling mainly due to external shocks and capital flows. What could reverse the rupee's fall? Possible turnaround triggers. US India trade deal talks ongoing as of December 2025. A deal would improve export outlook, boost market sentiment. Second is budget reforms, PSU, banking reforms, measures to attract FDI. Third one is 100% FDI and insurance. Approved in December 2025, long-term stable capital outflow removes past deterrence for global insurers. This could be a structural positive for the rupee. So how far can the rupee fall? Key levels to watch. 91 was a strong psychological barrier. That level has now broken. Expert view. Rupee may test 91 by end December. If flows worsens, downside risk remains. Current December 15, 2025 USD around 90.58 rupee. Big picture 30-second summary. So why the rupee fell? Not because India is economy is weak, but because US tariff hit export, trade deficit widened, foreign investors pulled money out. If trade deals and reforms succeed, the rupee can stabilize and recover over time. So conclusion, the rupee's weakness in 2025 is a capital flow problem, not a fundamental problem. Short-term volatility may continue, but India's long-term outlook remains stable as long as reforms continue and external shocks fade. So this explainer helped you understand the rupee's fall hit like. Comment below, do you think the rupee will stabilize after the budget? And subscribe for more simple macroeconomic explainers. Thank you.